Hello and welcome to tradingfloor.com. We're joined with Peter Ganru, equity analyst here at Saxo Bank. We're going to talk about cloud computing, this recent phenomenon, where it's taking us, and what are the opportunities to look out for. Peter, welcome to tradingfloor.com.
Thank you very much.
If we talk about cloud computing, it is a recent phenomenon. How would you describe it to our viewers who are not technologists? But what is it, and what does it mean to all of us?
Yes, thank you. Cloud computing is a rather new phenomenon, as you said, and we have actually come out of the client servers era, so to speak, driven by Microsoft. So companies and also consumers had a desktop computer and they had servers running in-house. And cloud computing is all about outsourcing it. So, and outsourcing, you have applications running on other servers. So, for instance, in the old days, maybe you would have server running your applications, and now it's running on a data provider, a data hosting provider.
So you could say that the internet is really fueling this as it connects the user with these remote servers. Now, who are the main companies out there that who are the real innovators in terms of using the cloud computing technology? Yeah,
sure. If we start with maybe the consumer, because then the investors could maybe relate to that better. Gmail, obviously a cloud computing service. You have all these new music services coming in. You have Spotify, predominantly popular in Europe, and you have and you also have like Pandora is kind of a cloud computing service in the US for online radio, But the whole cloud phenomenon and where the investments has really been put in is from the B2B market or companies. And Salesforce.com is clearly the mother, so to speak, of cloud computing. Founded back in 1998 by people from Oracle, and they have been driving this cloud computing. So actually what they go out to say to companies that they should outsource their whole IT infrastructure to Salesforce. And what does that mean? It means that they have an infrastructure that scales whenever the company grows. So you don't have to think about having this in-house servers and in-house specialists. And whenever you want a new application, you just click on a button, and then you're getting into your business.
So if we also have a look at companies like Amazon, for example, they've launched S3, where they're actually renting out some of their processing power. Is this a phenomenon moving forward? Are there going to be more service providers for more generic cloud-based uses?
Definitely. I mean, Amazon S3 is a perfect example of this cloud computing phenomenon, and it is driving costs down for businesses and startup companies as well. So in the old days, if you wanted to make a website, you would have your own servers. Now you could actually host everything on Google's or Amazon's hosting services. And you don't have to think about scalability anymore. That's the great thing. In the old days, if you were Yahoo and your traffic exploded, then you had to think about how do we cluster this server so to optimize it against, so we can handle all this traffic. Now you have the cloud computing service, and you don't have to worry about that. So, and it starts with a much lower cost, and that's is really driving the innovation in the technology space, definitely.
Now, from an investor's perspective, we've seen the 3PAR acquisition. There was a bidding war between HP and Dell, HP winning out. But you wrote an article earlier that the sky is vaporizing on tradingfloor.com. Is there potential bubbles that investors need to watch out for in the cloud computing space?
Yeah, one could say that there's always bubbles somewhere in the economy. And clearly, my rhetoric question was, is the sky vaporizing? And with sky, I mean cloud computing. And it's clearly in a hype mode. The stocks have gone up approximately 300% in 1 to 2 years. And investors are really pouring a lot of money into this. It's because they have, if you look at Salesforce.com, they are growing with an annual growth rate of between 25 and 30%, and their earnings is following the same pace. So, and investors want to be in that space. They want to seize the future and be part of it. And you saw it also in the .com bubble. It's the same phenomenon. So when you look at Salesforce.com, you look at Equinix, that is hosting Spotify, When you look at Rackspace, that is hosting a lot of different cloud computing companies in the US. When you look at all these stocks, they're trading at very, very high multiples in terms of sales and earnings. And it's just a signal from the market that there's huge expectations to these stocks. And for good reasons. The problem is, though, that they are paying a rather large premium. And history will tell you that these expectations are rarely met. So you're paying a high premium to get these stocks and own them. And yeah, so we think it's a bubble, and we think prices will come down. And as I wrote in the article, Equinix, the company that hosts Spotify, they had a slight downward revision of revenue. And this slight downward revision just hammered the stock. It went down significantly, and it spread to the whole cloud computing industry. And yeah, so when you have these high expectations, a slight downward revision in expectation could crash these stocks. And we don't think they can keep up with these high growth rates forever. So.
Okay, Peter, look, I think it's going to be a topic we'll be covering in many months to come. And don't forget, you can visit tradingfloor.com for the latest updates in global markets, and you can also follow us on Twitter at tradingfloor.com. Thank you, and we'll see you next time.